Good morning guys, and welcome back to my channel. If this is your first time to my channel, welcome. My channel is about forex trading and traveling, so if that's something you're interested in or is that something you're into, do hit that subscribe button so that you can be made aware when I do release new content on those topics, and also to support my channel. So thank you and welcome. In today's video, we're going to talk about how we plan on positioning ourselves to trade the US dollar leading up to the presidential election on November the 3rd. Now, if you don't know this, the presidential election on November the 3rd is a major factor which will have a major impact on the US dollar and all major currency pairs on any platform. We want to make sure that we understand our position. We plan on taking advantage of the volatility leading up to that date and even after that date as well. So in today's video, we're going to take a technical look at the charts. We're going to look at the four currency pairs, US dollar currency pairs that I trade, which are the US yen, the US Swiss, the Euro USD, and the GBP USD. So without further ado guys, let's jump straight into the charts. Okay, so we will start with looking at our position and our approach to those four currency pairs, starting with the USD yen. So USD yen, we jump straight to the weekly as always, and we can scroll the chart to the right to see a bigger the bigger picture. We can see a support level here at the 101. See, now that's where we will be expecting this candlestick to be heading to. In light of the US election just over 6 weeks away, there's a higher probability of the uncertainties in the market to drive the US dollar to these lows here, the 101 lows. So let's just jump down to the daily chart to have a closer look. Okay, so we did say that 101 is where we will be looking to take profit. My views on how I'm going to approach this trade would be first, looking at my MACD here, the mean crossing the signal, and we're just about touching the outside of the histogram towards the downside, and we know that this is a strong signal to the downside on daily. Now let's just look up at RSI. We can see we traveled quite a long way from this divergence here down all the way here, but we haven't really moved significantly. So if you look to the left and kind of spot the same kind of movement, so let's just look at this one for example here, all the way here, not much movement, and you look here to here, the same thing. There's a lot of movement. This is just one of the way I look at my indicators to help formulate my approach to trading any pair. It comes to you after a while looking at indicators and looking at charts. So this basically tells me that there's going to be a pullback all the way up to about 105. Well, I'll be expecting a pullback up to 105.7, 106. And on this pullback is where I'll be looking to short. Then I will also be keeping in mind the time scales leading up to the elections and also the geopolitical issues between China and the US, and also keeping close tabs on the actual election process, because what will drive this pullback will be a technical retracement back to 106, 105.9, and then it's inevitable that we're going to pull back to these lows. So I'm not going to go in yet because I'm expecting the retracement. So then once we retrace back to the 106, 105.9, then I'll be looking to short this pair, keeping in mind where we are with the fundamentals. So this is how I will be approaching the USD yen. Also keeping in mind, though the yen haven't had a good performance this year, we know that as a safe haven currency, it hasn't lost its touch, it hasn't lost its position yet. So this is a pair to keep on your watch list to take full advantage of, to ride the volatility over the next few weeks. So with that in mind, we will jump up back to the weekly, scroll the chart to the left, and as I said, I'll take profit point to be at the 101 to this candlestick, this wick low here, just about this at the support level of 101. I'll just put in a 101. I'll be hoping to go in at the 105, 106 with stop loss at 107. With that trade open, I'll also action my advanced stop loss to make sure that within 20 pips movement, my break-even point is triggered. So that's how I will approach this trade. Just jump back up to the weekly, stroll the chart to the right, and then we're going to move on to our next pair on our watch list, which is the USD Swiss. So now onto the USD Swiss, straight to the weekly. We've had a horizontal line in there as a low, so let's just jump up to the monthly to see exactly if that horizontal line is of any significance. No, it's not of any significance at the moment, so I'm going to just delete that. Sorry guys, I just wanted to make sure that, you know, if there was any reasons of putting that horizontal line in. So let's just jump down to the weekly. Okay, let's stroll the chart to the right. We can see a formation of a flag here. We know that a flag in this formation will most likely pull towards the downside. Let's just jump down to our technical indicators. We can see on our MACD on the weekly that there's a potential for a crossover here. The main is just about approaching the signal. We can see the histogram is shortening here. Looks like it's heading back towards the 0 mark. Looking at our RSI, we see a retracement up here. Let's just then jump down to the daily, stroll the chart to the right. We are consolidated at the 0.90, 0.91, and looking down at our technical indicators, we're looking at our MACD, and we can see that, you know, there's still an uncertainty here on the direction of the MACD. We look like we kind of consolidated here. On the RSI, we kind of consolidated as well, but we do know that, you know, heading towards November the 3rd, that you know we will need to keep eye on this, because I will be expecting the pull back up to maybe between now and then, a pullback up to maybe 0.92, 0.93, and then we will be then, you know, looking for a short position. Let's just jump up to the weekly. We'll be looking at a short position. You take profit to the 0.86. Again, on the pullback, once we're satisfied of going in on a short position, we will put in our stop loss. We'll put in our take profit at the 0.86, and then always an advanced stop loss to make sure that we hit our break-even point plus maybe 20 pips or 30 pips to make sure that we're secure on that trade. And once we do go in and our break even is triggered, we're happy with plus 20 pips. I mean, you can then move the stop loss to maybe 0.78, 0.8, or just take away the stop loss completely and let it run. Once you set up the trade and you're happy with it, it conforms to all your strategy. You set in your stop loss, you set in your take profit, and then, you know, all you need now is just to keep tabs on the trade. So let's just stroll this chart to the left a little bit. We're still on the weekly. 0.86, 0.87 will be a good point to put in your take profit, and maybe then adjust this as the trade move into your favor. But I don't tend to use trail stops on my trade, because I don't think it doesn't form part of my trading strategy. I don't think it's quite efficient. You know, if you know where your take profit is and you know where your stop loss is, you can easily then just manually adjust your take profit to, you know, as you see fit, or just let your trade to run to your take profit and be done with it. So let's just jump down to the daily again, stroll the chart to the right, and conclusion on this pair. I mean, we are consolidating at the moment. It's just a pair to watch. As I said, I'll be expecting to pull back to this level here, and then we can then see where we are in terms of the fundamentals to go short on this pair. So that's the USD Swiss franc. Let's move on to our next pair, which is the Euro USD. Now on the Euro USD, straight to the weekly. Now on the weekly, we can see the formation of this flag here, and we know that a formation of a flag in this position will most likely break to the upside. We've got another horizontal line here, but we'll delete that at the moment because we know where we are with the fundamentals. So I'm looking down at our technical indicators now. Let's just look at our MACD. We can see we are to the top side on the MACD. We got a little divergence forming on the RSI, but we know we can class that as a fakie. Let's just stroll the chart again to a little bit to the right so we can have a closer look. Again, guys, knowing that the election is not far off, and the level of uncertainty that's going to be priced into the market, we can be expecting this level here to be tested at 1.23, 1.24 level. But let's just jump down quickly to the daily. I'll be expecting the pullback leading up to November. So let's just jump up quickly to the weekly. Yes, we got a horizontal line here. I'll be expecting a pullback at some point. Keeping tabs on the fundamentals. I'll be obviously going long on this pair and hoping to take profit at the 1.23 1.24 level at this point. So again, on this pair is more of a waiting to see how, you know, if we have a significant pullback to this support level here, the 1.13 1.14, and then we'll see where we are with the fundamentals in terms of the volatility in the market, in terms of the uncertainty in the market, how investors are reacting to the setup of that of those media rhetorics coming out of Washington. So we will just keep tabs on this pair and jump. We're currently on the weekly, so we will then jump into our next pair, which is the GBP USD. Let's show the chart to the left. So on the GBP USD, and this one is a tricky one. We know that the 31st of December is the deadline for Britain leaving the EU with or without a deal in place. So we are on the weekly chart. Let's just have a quick look at our technical indicators. We're looking at our MACD crossover. We can see that there's a formation here. We're above the zero line. We are above the histogram. It looks like the signal is about approaching the main here. That's not telling us anything at the moment. It's more of a consolidation setup. So let's just look at our RSI. We can see here we had a little pullback, and then we're hitting to the upside. There's divergence here. Again, that's not telling us anything on the weekly. So let's just jump down to the daily. Show the chart to the right. We kind of got into the Kumo cloud here, pulling back above the cloud. Down again to our technical indicators, we can see the signal line is just about crossing above, over the top of the histogram. Looks like we're going to form a crossing here to the upside. Now looking at this pair, that will give us the indication of a weaker dollar heading up to that date, a level of uncertainty. But we also know that there's a high probability of the pound weakening leading up to December the 31st if we don't have a deal on the table. There's a consolidation here. I'll be expecting this consolidation to lower time frames as well. So if we just jump down quickly to the 4 hours, yeah, we can see we're in the cloud to the 4 hours. Consolidation here, divergence just about forming here. We can see on the MACD on the 4 hours that we crossed the zero line, but again, we're still consolidating here. So there is kind of a wait on this pair. Let's just jump quickly up to the weekly, and how we plan on playing this will be, we can see that where we are at the moment is a key support and resistance level. So the consolidation in place here will play out, and we will be expecting a pullback to maybe these lows here before the time, the 1.21 to the 1.22, and then keeping tabs on the fundamentals. We will then see, whether we can go in for a long position on this pullback. So once we've got down to this pullback to 1.21, keeping tabs on the fundamentals, we will see if we can then open up buy position for the pound to go up to the 1.4. This will be one of those trades that as soon as I open that position, I'm going to go straight into the advanced stop loss and set my break-even point to trigger on break-even plus 20 pips, and then taking profit at this 1.43 level. So it will be more of an automatic trade. I'll set this and just walk away from the terminal. So let's just jump. We're currently on the weekly. We always leave our charts on the weekly. Now let's just jump straight to gold USD. Now I haven't mentioned this earlier on the intro for gold USD because I've currently got a position open on gold USD. Now straight to the weekly. Now we know that due to the level of uncertainty in the market, the geopolitical tensions between the ever-growing geopolitical tensions between the US and China, now China, Taiwan, and the US in the middle of that, we know that the level of uncertainties in the market is going to increase. I think it's Goldman Sachs that forecast earlier this week that they kind of forecast gold trading up to $2,100 per ounce and onwards. So we've currently got a position open at 1989, as you can see here. We're currently at 1954. Now I've got my take profit already in there at 2160. Now I'm certain from all my analysis that we're going to be heading north of $2,000 again on gold. So let's just look straight at our technical indicators. Looking at our MACD on the weekly, we can see the mean is just about touching the signal. I'm not expecting a crossover here, simply with the fact that I know what's happening fundamentally. And let's just look at our RSI. Again, we got divergence here. This is just a good example that we've got a divergence here, but nothing's really happened significantly on the pullback, which will normally be something that would happen on a divergence like this. So if you look, just looking left, for example, let's just look at this divergence here, for example, in 2016 divergence here, we've had a pullback here. Let's look at a divergence here. Let's look at a divergence again in 2008 divergence here. We had a pullback here, but we've had a divergence here. The pullback is not significant. This is telling me that there is a higher probability that this is moving to the upside. So let's just jump down to the daily and have a stroll the chart to the right and have a closer look. We're kind of consolidated here in the cloud where we are at the moment, between 1954 and 1930. We've been consolidated at that point for the last few days, weeks. So if we just look quickly down to our technical indicators on the daily, we can see on the MACD, the mean is just about touching the signal line. The histogram is to about close to zero. We will be expecting a crossover in the next few days. To the upside, we've got divergence here on the RSI, again all pointing towards the upside. We also know where we are fundamentally. We will be expecting this upward trend to continue all the way up to 2,100 and onwards. So let's just it's kind of pointless going down to lower time frames on this. We're happy with the trajectory, and as you can see, I've got a position open on that trade as well. So let's just jump up to the weekly, stroll the chart to the right, and yes, I mean, in summary, for those four currency pairs that we looked at, the USD yen, the USD Swiss, the Euro USD, the GBP USD, and gold, we've kind of touched on where we are with our positions, how we view these currency pairs, and where we plan on going in to make the trade, what we are expecting our take profit to be, and how we plan on taking full advantage of the volatilities that are ahead of us. So if you've got any questions or anything, do drop it in the comment below, and thanks for watching.
Okay guys, so there you have it. We touched on gold USD there towards the end. Gold USD is one of my favorite pairs to trade in times of uncertainties in the markets. So between now and November the 3rd, and even after that date as well, there's going to be a lot of uncertainties in the market, and I'll always tend to keep tabs on safe haven assets, safe haven currencies like gold USD and the USD yen, GBP USD, and so on and so forth. There you have it guys. If you do like this video, do give it a thumbs up, hit that subscribe button. If you got any questions or anything you want to ask, drop it in the comment below, and I'll catch you guys in the next video. Thanks for watching.
Yeah, I'm a bit too much, but I'm finding it.